for those of us just joining, we're going to hold questions till the end. I'm going to do some information on PPP plus some of the other things that are available through SBA right now. And then Jonathan is going to get a little bit more detailed on PPP because that seems to be the, questions of the day and the stuff that is really on people's minds right now. So with that, we'll get going here. So the Paycheck Protection Program is a loan program that provides forgiveness for retaining employees by temporarily expanding our traditional SBA 7A loan program. So starting April 3rd, small businesses and sole proprietorships could start applying for these loans to cover payroll and other expenses. These applications are done through existing SBA lenders, but also through community banks that are coming online, credit unions. If they're applying for this, they can also help provide money. So it's something that, if you're paying payroll, paying employees, you really want to take a look at. The forgiveness on this is important. And also, I mean, two words I've been using when talking about all of these programs are patience and persistence. This is a $350 billion program that was signed into law the Friday before April 3rd, and the rules just dropped at 6 o'clock the Thursday night before April 3rd when banks were able to start taking applications. And many banks, didn't know exactly what the rules were yet. There's still stuff that's a little bit gray out there. We're trying to get, more guidance and things every day. But it really is patience and persistence. Normally SBA does about $30 billion a year in loans that we guarantee across this country. And, as of Wednesday, there's already been over $100 million in participation in this PPP program. So it's a ton at once. There's a lot of volume. Lenders and the like, everyone is very, overwhelmed because it's a short-term kind of thing and everybody's trying to get their capital fast. So the best things you can do are kind of prepare yourself, get your payroll records ready, get your calculations put together so that when your number comes up to talk to your lender, once you've applied, that you're ready to move forward from there. So starting April 10th, also independent contractors and self-employed individuals can apply for and also receive loans to cover payroll and certain expenses through SBA lenders as well. So PPP, who can apply? Nonprofits, 501c3s. I know we discussed this with Scott at some point in some other chambers, but 501c6s are not currently eligible. Veteran organizations, tribal business concerns, sole proprietorships, self-employed individuals, and independent contractors who have 500 or fewer employees, okay? There are some industries based on NAICS code that can have more than 500 employees. Those tend to be specialty manufacturers. If you fall into that, Scott's going to be able to share this presentation with everyone afterwards. So there's some links in here that you can click to follow to see if your business met any of those specific concerns. So for this program, most of our affiliation standards are waived for small businesses. So hotel and food service industries, many times, one group will own multiple hotels or, multiple food service stores and whatnot. So those affiliation rules are waived to keep them under the 500 to be able to have them keep their folks employed. Again, Paycheck Protection Program, the intent of this is to keep people employed. And that's what we're really looking at. So franchises that are in SBA's franchise directory, there's a link there that you can check out. And also anybody that's received financial assistance from our small business investment companies, which are venture capital type investments, the affiliation rules have been waived. So what do you do to apply for the PPP? You know, we're getting a million phone calls every day about it here. You know, all of us here at the SBA Buffalo District Office, we cover the 8 counties of Western New York. So, you know, phone's been ringing off the hook and trying to help people kind of navigate through this. But really, the application goes to your lender. The suggestion is go to the lender where you have your current commercial banking relationship with to get this done. Lenders are, you know, want to make sure that, you know, it's a little bit easier for them to do these for their existing customers. So that, you know, you want to start with your SBA lender first, or the lender that you work with for your commercial banking. You know, any federally insured deposit institution can come online and take these loans. Credit unions are able to get ramped up to accept these as well. And, you know, Farm Credit also is a place that you may want to investigate for this too. It'll work easier for you if you go to a lender that you're currently working with for your business. Again, SBA is bringing lots more folks online. I saw about 30,000 additional lenders that we didn't, you know, have that were, you know, approved SBA lenders before. And it's just specifically for this program. We have a search tool. The link is there in the PowerPoint that you can click on, put in your zip code, and it'll spit out a list of lenders that are able to take these applications for the PPP program. So how do you apply? You need to complete the PPP loan application. It's found on the Treasury website. And there's also going to be an application that your bank is looking for you to complete. So you can click there to get the application. Applications have to be in process by June 30th. You know, I know we're in New York. It's tough now because we really don't know when we're going to come back online. But again, the intent of this is to keep paying your payroll, to keep paying your employees. So to help bide the tide, to get through hopefully, you know, an 8-week period that will have everyone's doors, you know, able to open again and ramp back up. So the PPP loan amount, how do they figure this? The maximum loan amount that you could take is the lesser of $10 million, or an amount you will calculate using a payroll-based formula specified in the Act. But the basic formula is your average monthly payroll costs multiplied by 2.5 times. And when we talk about average monthly payroll costs, that's really your employee compensation. So if you pay a share of health insurance, if you pay 401k to employees, those are the costs we're talking about including in this formula. Okay. Lenders will have a more specific list and things they're looking for, but also folks like Jonathan at FreedMaxick are, I know, helping people get these applications together. You can contact the Small Business Development Center at Geneseo, SCORE Mentors, whoever you may have a business advisement relationship with that can help you take a look at this to get your costs to have a good number to work with. And if we think about this from the perspective of, your average monthly payroll costs, let's say, are $20,000. So when they figure that loan amount, 2.5 times 20,000, you're looking at about a $50,000 loan. Part of that is going to be forgiven based on the payroll that you pay. So if we do a good average cost, and then you chew up the $20,000 a month over the 8 weeks, you may have a $10,000 balance that some of that might be able to be written down by your rent or mortgage interest, and utilities payments as well. I'll talk a little bit more about that here. What do we use the PPP loan proceeds for? This is important to note. Payroll costs, including benefits, interest on mortgage obligations incurred before February 15th, rent under a lease agreement that you had in place before February 15th, and utilities for which service on those utilities began before February 15th. If your business started after February 15th, this program, the way it's currently written, is not going to work for you. What are the terms on the PPP? It's a 1% fixed rate, and it's a 2-year term. So we think about if you have a $50,000 loan and 40 to 45,000 of it may be forgivable, then you may have a $5,000 to $10,000 note that's going to be need to be repaid within 2 years. There's a 6-month deferment on payment to help folks get through and ramp back up fully. There is no prepayment penalty on any SBA loans, so if you get ramped back up and want to pay this off immediately, then there's no problem for you. And one of the biggest things on these PPPs is that they're not taking collateral. Most times, if you've gone for any business financing, you know that they're going to be looking at collateral and potentially a personal guarantee. There is no personal guarantee requirement on this as well. So, but being the government, if the proceeds are used for fraudulent purposes, the U.S. government will pursue criminal charges against you. That's we want to make sure these loans and the forgiveness tied to them are being used to pay payroll and to pay employees, to keep them off unemployment, to keep them, living at the standard they're used to with their health insurance and benefits. So that's why these collateral and personal guarantee. I'm sorry, hold on. Whoa, sorry. Okay, here we go. So the PPP loan forgiveness. You'll owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utilities payments over the 8 weeks after getting the loan. That 8-week clock is going to start from the time the note is signed, okay, with the bank. So you just want to be aware of that you need to get ramped back up to full, payroll at the time that you're taking this loan. If you currently have employees that are on unemployment or whatever else, you'll need to bring them back. If you've been paying your employees through this, you get your application in as soon as you can, and you use that to continue to pay them, and the help is here. So not more than 25% of the forgiven amount may be for non-payroll costs. So whatever is forgiven, they're going to look at payroll first, and work that percentage. So they're, again, the intent, Paycheck Protection Program, keep people employed, keep paying payroll. So that's just something you want to know and be aware of. You'll also owe money if you did not maintain your staff and payroll. And I know the next question is, and maybe Jonathan has a better answer on this, but we haven't received clear guidance. What is that based on? Head count, or similar to the Affordable Care Act, when this full-time equivalent employee piece has come in? We do not know what that's based on. It's really based on payroll costs for now. They don't have to be the same employees, but they'd like the head count and numbers to be back where they were before this happened. And again, we are waiting on further guidance as to how they're going to look at that employee count. So stay tuned on that because I know that's a question that keeps coming up. So there is this economic injury disaster loan advance as well. It's a $10,000 advance. Initially, this was told to, a lot of us as to be a 3-day turnaround, but it's 3 days from the time you would speak to a loan officer from the Disaster Assistance Center, which takes about 2 to 3 weeks to talk to someone. So just, kind of tempering expectations on this. This $10,000 advance you can get sooner, but you still need to go through the normal requirements of getting an economic injury disaster loan first. To apply for the COVID-19 economic injury disaster loans, there's a link there. It's covid19relief.sba.gov. So there's the loan advance part of that, which is about $10,000, and then there's a little bit more that folks are able to borrow. Questions on this program have to be referred directly to the SBA Disaster Assistance Center or via email to their customer service email there. This is a program run right through SBA, and the checks are cut directly from United States Treasury, so it's something that you're not going to work with a bank on this economic injury disaster loan program. But really, in the EIDL program here, you can apply for until December. So for now, really the PPP is what people should be looking at this point in time, because number one, that's going to provide, the most forgiveness. The advance part of that does not have to be repaid, but that's prorated based on what you get from your PPP loan. So to me, it makes sense to do the PPP first. And then if you're still looking for some additional capital, then you probably take a look at the EIDL, because, that's all going to have to be a loan with the EIDL if you get forgiveness on the PPP. And I know it's confusing, but to me, you keep them separate, and you worry about the PPP for the payroll, and then you can worry about additional costs on the EIDL. I don't think you want to have to worry about the confusion and prorating, one forgiveness based on the other. I think that just makes it more complicated for folks. So we do have an express bridge loan program. Folks can get up to $25,000 quickly through SBA Express lenders, so that's something to take a look at. If you're looking to, just borrow some capital quickly, and this is for folks who just have a very urgent need for cash to, pay bills, keep the doors open, whatever it may be, while you're waiting for some of these other loans to come in. They have to be done through an SBA Express lender, which is pretty much all of the, participating SBA lenders in our region. So your M&T, Key Bank, Community Bank, 5 Star are all SBA Express lenders. So you don't have to worry about finding an SBA Express lender, but it's just a matter of getting applied for this loan. Can be up to $25,000 with a quick turnaround. And you can use proceeds from some of the other stuff to help pay for that. SBA debt relief, this is something that's been kind of glossed over. You hear a lot of things in the media and everything else about PPP and all this, but SBA debt relief program will provide a reprieve to small businesses as they overcome the challenges created by this health crisis. Under the program, the SBA will pay the principal and interest of current 7A SBA guaranteed loans for a period of 6 months. So if you have a loan with the SBA currently, we are going to pay those payments, principal and interest, for a 6-month period to help get through this current crisis. We will also pay the principal and interest of new 7A loans that are originated that does not include PPP, but any new 7A loans, if a business is looking to do that now, prior to September 27th. So that's something that's going unreported for the most part, but can provide significant relief to borrowers in multiple ways there. And that's just kind of the getting started for me. I think maybe we'll kick it over to Jonathan, and he can go a bit deeper on the PPP for us, and then we can answer some questions from there.
Okay, thanks, Greg.
Okay.
Thank you.
Thanks, Greg. That was really good detail on some of all the programs that the SBA has going on right now. And I think it's important that everyone kind of has an understanding of all the programs, because it's not a one size fits all. PPP may not be the right choice for every type of business. So whether it's the EIDL loans, the emergency grant, even the employee retention credit from a payroll tax perspective, there's a lot of opportunities out there for businesses of all sizes, and not for profits as well. So just there's a lot there, and it's good to kind of get an understanding of everything that's available. So I thought that was really good.
Thank you.
So to take a little deeper dive into the Paycheck Protection Program, I think the two words that Greg said that were really, really important is patience and persistence. To just get a little better background or understanding, this was signed into law and literally rolled out in a matter of days, probably less than 2 weeks from the president signing it to when loans were able to be applied for. So it was quite a feat to put this into law. So, some of the hiccups that we've been seeing, I think you just need to have some patience, because everyone's doing their best. And, it is the largest small business support program that, we've really ever seen for small business support. So, just taking the size and the scale into perspective, that patience and persistence is really important. And then just some additional background, on Friday alone, when applications opened up, it was reported that there was about $30 billion of loan applications that were processed by banks. And, what Greg said is the SBA in all of last year wrote a total of $30 billion of loans. So to think that they did a year's worth of work in one day is really something to really consider there. So, and just, also the intent of this is really to give small businesses a springboard for when the economy opens up, and when everyone has the green light to really operate as business as usual. And the way that small businesses are defined, or the umbrella that the PPP encapsulates, it really covers 80 to 85 million U.S. employees, that essentially work for the small business. So, it's a very big, far-reaching program that can really impact a lot of businesses and a lot of Americans. So that's just a little context and background on I guess some of the economic factors involved. So when applying for the loan, there is some certifications that you need to make on the loan application. You do have to certify that the current economic uncertainty, makes the loan necessary to support your ongoing operations. You also have to certify that the funds will be used to retain workers and maintain payroll or pay other eligible expenses. And I think that's probably the most important certification to understand. You should not be applying for this if you do not plan on spending the funds for qualified uses and predominantly for payroll costs. If you don't have much from a payroll cost perspective, then maybe the EIDL loan may be better. That's better suited for businesses that don't have payroll costs but have other overhead expenses that are high on a monthly basis. You also have to certify that you have not and will not receive another loan under this program, and you do not have an application for a loan under Section 7A for the same purpose, and you have not received another Section 7A loan for the same purpose between February 15th and December 31st. So I think it's just important to remember this PPP falls under the Section 7A, and the other loan, the EIDL, is Section 7B. So there can be some overlap with the EIDL 7B loans and the PPP loans, but you also have to make sure that you're using the funds for different purposes and for different resources. And you also have to certify you will provide the lender documentation that verifies the number of FTE employees on payroll, amounts of payroll costs, and covered expenses for the 8 weeks after receiving the loan. And you also have to certify that all the information provided in your application is true and accurate. From my understanding, there's most of the onus is really on the borrower to, if it were to be questioned, that the burden of proof's on them. The banks, have to do some level of certification, but the SBA is trying to make this as streamlined as possible. So it's really, on the business owner to make sure that, they're appropriately using the funds and making the proper certifications. So moving on to the next slide, and there is some overlap here with Greg's presentation, but the Paycheck Protection Loan, the maximum loan amount that you can receive is the lesser of 10 million, or your average monthly payroll cost times 2.5 times that, as well as there is an ability to do some sort of refinance with a 7A, and also with the $10,000 emergency grant, if you receive that comes into play as well. And just know that there are special rules for businesses that were not in business from February 15th through 2019 through June 30th, 2019. And also there are special rules for seasonal employers. I'm not going to get really into those rules, but just know that there are special rules out there for businesses that may not fully qualify based on the time periods outlined. To better define payroll costs, because that's really what the loan is based on. Payroll costs are defined as payments of compensation to employees for wages, commissions, and salaries not to exceed an annual rate of $100,000. Cash tips or equivalents you can include vacation, parental, family, medical, sick leave, severance or separation pay, group healthcare benefit pay, including insurance premiums, and state or local tax on the compensation of employees. Items that are not counted, compensation above $100,000 for any one employee on an annualized basis. There was some frequently asked questions that were issued earlier this week, because there was some question on how do you define compensation for the sake of $100,000. And, they did say that is only cash compensation. You do not have to look at benefits or retirement benefits that are in the non-cash form and limit them to the $100,000. So the $100,000 is strictly, cash compensation. You can also not count payroll taxes. So there was also some I would say ambiguity on this, and they did issue some frequently asked questions that address this. So you cannot include payroll taxes that the employer is required to pay on wages. So that that cannot be included in payroll costs, and essentially that will not be eligible for forgiveness. There were some questions on whether the employee half of the payroll cost needed to be netted against the compensation, and I believe based on the frequently asked questions, you can use your gross wages before payroll costs. So there was some clarification on that. Some additional things that aren't counted: compensation for an employee whose principal place of residence is outside the U.S. I know this has come under question with a lot of our agriculture businesses for a lot of their workers that may be here on visas. There's some questions on eligibility for that. You can't use qualified sick leave and family emergency leave wages that may be forgivable under other programs. And they also did clarify, payments to independent contractors should not be included for the business, because essentially independent contractors have the ability to apply themselves. So essentially, they don't want their payments to be double counted. So there's some details on payroll costs, and just, you know, a couple more points. As I said, there was some ambiguity on payroll costs, and on April 6th, you know, frequently asked questions were issued. However, if your application was applied for before April 6th under, you know, before the clarity, you do not have to reapply. But if you have applied since April 6th, you know, you may be asked to revisit, or you can revisit your application to recalculate your payroll costs now that there's more clarity on that. So moving on, you know, documentation needed for the PPP calculation. You know, honestly, from what we're seeing, every bank is probably a little different in terms of what they're asking or what they may need to feel comfortable for issuing loans under this program. Generally, what we're advising, you know, at a bare minimum is to, you know, collect your quarterly 940s, 941s, and 944 tax reports from 2019. As well as, you know, a 12-month payroll report, basically from the most recent payroll you've run 12 months prior. It's important that you show, and the bank needs to verify that you did have employees on payroll as of February 15th. So that 12-month rolling period helps confirm that. And, you know, you will also have to show documentation to confirm your health insurance premiums paid by the company, as well as the retirement plan funding paid by the company. And, you know, from what we've seen, you know, many payroll providers, you know, some of the largest in the country have worked on generating reports that help businesses, you know, summarize this information without having to kind of work through a calculator, adding up your 941. So, you know, if you haven't applied or you're still kind of questioning what to do, you should reach out to your payroll provider, because they may very well have that information available to you in a summary report that should make it a little easier on you. So Greg did touch on this as well, but use of the funds, you know, during the period February 15th, 2020 through June 30th, you may use the funds for the following reason, or for the following purposes. Payroll costs, of course, as we previously have defined them. And you know, an important note to make is that payroll costs must comprise at least 75% of the loan use to fully maximize forgiveness. So if you use the loan but only 50% is for payroll costs, that's going to reduce how much of the loan is forgiven, because remember, the intent of the program is to pay payroll and wages to employees. So that's important. That was clarified on the April 2nd rules that came out. You can use it on interest on any mortgage obligation incurred before February 15th, 2020. Rent for any lease that was enforced before February 15th, 2020. Utilities that were in service before February 15th, 2020. You can also use it, based on what I've read, on interest on any other debt incurred before February 15th, 2020, but just make sure you know that only interest on a mortgage obligation is eligible for forgiveness. So although you can use it to make interest payments on other debts, business debts, that will not be eligible for forgiveness. So just make sure that the rules on that are clear. And then in terms of the loan, Greg touched on, you know, 2 years, interest rate of 1%, and, you know, payments can be deferred the first 6 months from the date the loan funds were dispersed. Loan forgiveness, you know, this is, you know, my opinion, you know, doing the payroll costs, you know, is one thing, but it's really important that businesses, you know, have an understanding on once the loan, you know, is hopefully approved and funds are in hand, how to spend the money to make sure that you're using it in a way that'll maximize the amount of this loan that is forgiven. You know, I'm advising all my clients that, you know, that's really when the work starts, to make sure that you're fully utilizing the funds appropriately, and that you know kind of where your headcount needs to be when you receive the loans, and as well as, you know, how much wages you have to pay your employees to make sure that this can be maximized. And, you know, as we previously discussed, payroll costs are forgivable, interest on mortgage obligations, rent, and utilities. And, you know, it's just important that these all had to be in service, or, you know, in force before February 15th, 2020. They don't want new lease agreements coming out of the woodwork to take advantage of the program. And, the forgiveness amount will be reduced if you do cut your employees during the 8-week period, or you cut your salaries to a certain extent of your employees during that 8-week period. And there is some interplay. If you did receive a $10,000 advance grant under the disaster loan program, that'll reduce your loan forgiveness, because essentially that did not have to be repaid. So loan forgiveness reductions, don't want to get into, this is important, but as Greg said, I think we're still waiting on, how they're going to define full-time equivalents, or, truly, how they're going to view employee headcount for the loan forgiveness. But just know that, the amount to be forgiven will be reduced basically by the formula. What they're going to do is they're going to compare your employee headcount, full-time equivalents, sort of still to be determined, over the 8-week covered period, which is the 8 weeks after loan origination, when you're going to be using the funds. And essentially you have the option to compare that employee headcount over that 8-week period to either your headcount on average between February 15th, 2019 through June 30th, 2019. So essentially the period that this PPP loan is aimed to cover. Or you also have the choice to compare it to your average of employees from January 1st, 2020 through February 29th, 2020. So you do have that option. And, of course you want to pick the one that's most advantageous for loan forgiveness, but just know that that is out there. And then, a question that we've been seeing a lot, because, we're a month into this downturn and a lot of businesses being closed, that, businesses can restore a reduced workforce or reduced wages that occurred during the period from February 15th, 2020 through 30 days after the passage of the CARES Act. So essentially, if say you're a restaurant owner and you've reduced your workforce and you're only doing takeout at this point, but you do get the PPP, you bring your employees back, you will not be penalized for that. But it's just important to know, to understand the rules on that. When, applying for the loan forgiveness, essentially you apply to your lender, and then the lender essentially applies to the SBA, and that has to be done within 60 days of the end of the loan, or when you spend the money. The borrower must apply for forgiveness, and the applicant must include that documentation that verifies the number of full-time equivalents on payroll and pay rates for the periods used in the forgiveness calculation. I think these rules are probably there's still to be some detail on these, but we're thinking payroll tax filings or other wage filings can be used to support those numbers. Documentation not limited to canceled checks, verifying payments on mortgages, rent, utilities will have to be provided to prove use of the funds for the loan. And what we've seen is some banks are recommending that businesses look to open up a separate checking account strictly for the loan funds. It might be an easy way to kind of keep track of the loan funds. It's not entirely feasible if your payroll comes out of your operating account to change your ACH payroll for the 8 weeks. But, if you do want to set up a separate checking account, it'd be a good way to kind of just transfer the money to your operating account as payroll comes due or as rent comes due, just to really, look at that checking account to know how you're utilizing the funds. So that's just something that we've seen from local banks. And through all this, there is still some unanswered questions. We're still waiting on additional guidance on a couple of areas. For self-employed individuals and independent contractors, which those applications open up on essentially tomorrow. It's not, in my opinion, clear, and some of the banks aren't entirely clear on what information that they're going to need to verify. We're thinking at a minimum, if you file a Schedule C, you'll want to provide your Schedule C that kind of supports your self-employment earnings for 2019. Also, if you do receive 1099s that report income, that'll be important to include just to support the amount of income that you've received over the last year. But we still think there's more information to come about that, as well as, eligibility for partners in a partnership. Questions we've got, if partners receive a guaranteed payment from the partnership, it is our understanding that should not be included in payroll costs. It was excluded from the rules. We're not sure if it was intentional or unintentional, but partners in a partnership there are still a lot of questions on that. Even if you don't receive a guaranteed payment, but you do have self-employment earnings reported to you on a K-1, still unclear as to how a partner can be compensated through the PPP program. So hopefully more to come on that. That should do it on what I had prepared. Hopefully that was some good detail and information, and I think we're probably ready to open it up for some questions.
Okay, thanks, Jonathan. Well, we don't have any questions in the chat queue, I can see. If there are people that have them, if we can try to do it in an orderly fashion, if people want to just ask them of Greg or Jonathan, kind of just start talking, and we can moderate a little bit if we can do it that way.
That was good, Jonathan. Thank you, by the way. Good detail.
Thanks, Greg.
I have a couple questions. I don't know how to raise my hand on this.
We've got you. Go ahead.
Okay.
Just say your name
Okay.
so we know who they're speaking to. Please.
Okay. My name's Diane Bilo, and I work for Gentech Scientific in Arcade. Now, can you further explain the reduction in, like when you mentioned about the restaurants, when people are working half-staffed, part-time because of takeouts, and then when they bring people back, as far as calculating the loan forgiveness on that? Maybe go in a little more detail on that. Like right now, our company right now is, we had to, lay off our techs that go out to install laboratory equipment. And then eventually, once everything is lifted, then they can start working again. Of course, they can't work right now. But, we're losing revenue because we can't send these people out on the job.
Right. So, I would say that, if you are applying and the loan is originated, it would be advisable to really bring and start paying your employees to really maximize that loan forgiveness, bring them back, even if we know it's tough, because even if the economy hasn't really opened up yet, you may be paying your employees to not do much work, but, try to, there might be ways to make good use of their time. But, it is important to do what you can to bring your employee headcount and kind of your wages back to a normal level that was used to apply for the loan. So, I probably don't have a better explanation than that for you, but just know that, it's designed, it wasn't necessarily designed to really come into effect and start paying employees when everything opens up. It's, as I said, it's more of a springboard. So when the economy does open up, you're not then bringing your employees back and kind of refiring up the plants. You have some sort of grace period where your employees can get paid, and you're kind of getting ready for full operations. So that's kind of my understanding and kind of my advice on that. I don't know if Greg has any other.
Yeah, no, it's about paying payroll, and really it's, part of it is meant to keep people off unemployment, right? So that you can just continue to pay your workers, and not have, significant benefit changes or other things that may happen. So yeah, that's right, Jonathan.
So what if, okay, so if we had a couple employees that were not working out well at all, before this happened, and we ended up permanently laying them off because of performance, what have you. Does that affect ability to get loan forgiveness on the people who are receiving payroll, who are working?
No, it's going to be prorated based on the head count. So, whatever probably and we don't have full clear guidance on this yet, but I would imagine it'll be some sort of percentage. But you could also replace those employees. It doesn't have to be the same employees either.
Okay. Another quick question. Now, I see this covers for, I'm also involved in religious organizations, nonprofit United Methodist Church. Does it cover religious organizations where, we've got, these 4 churches paying a pastor, but yet we can't have service, and our offerings people aren't giving like they were because they're not at church, and but we want to be able to open up our doors once everything is lifted. Does it cover that?
They did release some faith-based frequently asked questions, and I will send those along to Scott so he can forward them to you. It depends on structure and all sorts of stuff, but potentially. Maybe Jonathan has more on that.
Okay. All right.
Unfortunately, I don't have much more other than deferring to the frequently asked questions that were issued. I haven't dealt with that in detail much.
Okay.
There's three or four questions that are written on the side over there. One of them is, does it matter if we were open for business or closed due to state mandate for the 8 weeks of keeping employees on payroll? That's the first one.
It does not matter if you're open or closed, but you have to be paying the employees to make it work. So if they're on unemployment now, you have to bring them back from unemployment once the loan gets originated and moving in order to get the forgiveness.
And then I don't know if you can see the other ones there. If you've applied for the grant loan, but now you are thinking the PPP loan is a better fit, can you tell the loan officer when they call that you do not want the grant loan anymore and just take the PPP loan?
Yes.
Okay. Questions. Curious to know more about the special rules for seasonal employers, whether an LLC or a nonprofit. Josh works for both.
I am too. I don't know if Jonathan has anything further on that, but there's still a lot of guidance to be written on all of this.
Yeah, unfortunately, I agree that there's still some ambiguity and still a lot of unanswered questions and kind of that area at this point.
All right,
could I follow up with that really quickly and then just ask, is it better for us then to take a wait and see approach, even though these loans are first come, first serve?
I mean, I would watch the news, number one, to see how much funds are being committed, because I know they're talking about adding another $250 billion to this program now as well, given the participation. And if you see things getting close, then you probably want to get that application in sooner rather than later. Jonathan, I don't know if you have a follow-up on that.
Well, yeah, I guess I would just, agree that, I've read, and, I think even, don't quote me on this, but, the Treasury Secretary did say that he's going to push Congress for more funding for like that $250 billion. In terms of, seasonal employers, an example that I think of is more like, say, for a golf course, for example, where, from January to March, they may not have a lot of employees, but then, and even, if you were to look at their wages on an annual basis, their average monthly payroll costs would be reduced. But if you look at it during a peak season, that's when their payroll ramps up. So I know that you can look for seasonal employers, look at a more specific defined period of time over the last 12 months. I think it could be like a quarter where, when you're at a high payroll cost, to really make sure you're maximizing the amount of loan that you receive.
I have another one from Hillary. Did I understand the PPP loan is a 7A loan and the idle is a 7B, and you could apply for both as long as the idle isn't used for payroll expenses?
You can apply for both. Forgiveness on that $10,000 idle advance is going to be tied to the number of heads in your business. So, I mean, to me, the PPP is better to use those proceeds for payroll. And then if you do the idle as well, then you can, do your rent and utilities and some of that in there, just so you're not, the formula and prorating, I think, creates confusion if you tie both to payroll. Jonathan, anything on
no,
that for you?
That's the way I understand it as well. You can do both. You just have to make sure that they're for different purposes, and I think that covered it.
Okay. Scott, I can see this one from Nick here next.
Yep.
The head count needs to be back up. Really, it's from the time that the loan originates and you sign the note, because that's what determines your payroll forgiveness. So yes, technically by the end of June, but if your 8-week clock started before then, then you're not paying those payroll costs, so you're not going to have as much forgiveness on the PPP.
Let's see. Yeah, is the loan 2.5% payroll plus cost of utilities? That one wasn't posted on there, but was sent to me. Again, is the loan.
The loan is strictly based on 2.5 times your payroll cost. It can be used to pay utilities, but it is strictly the loan amount is strictly based on payroll costs. So
that 0.5 that they're giving you in there that can be potentially forgiven on utilities and rent and that, but yeah, the loan itself is only figured on the payroll cost, as Jonathan said.
Okay. And then I don't know if you can see the other one over there, that they let an employer go prior to the shutdown and they need to fill the position, even though they didn't plan to do so. And also they hire seasonal workers for tax season. So some months they have more than the rest of the year. Will that affect them negatively?
Well, I mean, having to let somebody go prior, it depends on your payroll records, and then it may just be prorated by that one position, because we're looking at the previous 12-month average. So, and I'm not sure about the other. Maybe Jonathan has more on the tax seasonal workers.
Well, I guess I would just make sure to just, I guess, keep it a little bit in perspective, is that obviously the objection, you want to maximize loan forgiveness, but if it's not going to be a all or nothing, it's going to be prorated. So, I mean, no one wants to have a loan, but if, let's say, for example, you did get $100,000, PPP loan, and, when the numbers come for forgiveness, you have to pay $10,000 back. No one wants to do that, but I still think you probably, from a business perspective and from your employee perspective, I still think you probably greatly benefited from the program. So, I think, as Greg said, and, as I alluded to, the full-time equivalents or the headcount rules, still not entirely clear on the specifics of that. So, although you kind of want to go into that 8-week period, kind of knowing the rules specifically, I think there's still going to be some information to come on that in terms of, how they define full-time equivalents or headcounts and employees for the sake of the loan forgiveness calculation.
I have one that's not written, and then we can go to one of the ones that's written. I have a sole owner of an S Corp. The sole source of income is from rental properties. Filed the SBA form for the $10,000. That must be the idle grant. Don't believe they qualify for the payroll related one. Question is there something else for people that are out rent dollars or any other program that would better suit them than filing for the idle program?
Not that I know of.
Okay.
No, I think if you don't really have payroll costs, I think, the idle is really probably one of your few options.
Can a sole proprietor apply for unemployment while they're waiting for the loans?
Yep.
Okay.
Well, did they change the unemployment rule so a sole proprietor could apply?
Yeah, self-employed, yes, it says.
Self-employed, yeah, okay.
Yeah, and then there's the pandemic unemployment assistance, which, so if we go up to that question, I don't have any employees or payroll, and that John touched on it. Let's see, should I apply for PPP to cover rent and utilities? Technically self-employed as a DBA, could use part of the funds to pay myself. How would this work, and can that be forgiven?
So I would say, you would be, as I read it, you would be eligible for the PPP, and you can use the funds for rent and utilities. The part that I'm still, that I've wrestled with internally, even our firm is, for these sole proprietors, what substantiation do you need to show that you essentially paid yourself if the money in your account is your money? And I don't know if Greg has any details on that, but I think that might still kind of to be determined. And I think banks may have similar questions on that.
Yeah, I think that's a gray area that we're still waiting for some more guidance on. Self-employed individuals and independent contractors can begin applying tomorrow, right, for PPP. But I would refer that to your lender to see what they're going to want as proof, because a lot of this is left up to the lenders too. So they're creating systems as they go, and one lender may want your payroll tax filing forms. One lender may just want some payroll records. So you really just want to talk to your lender and understand what they're looking for on these, because everybody wants something a little bit different. There's not a real standard process across.
And then that last question there is applying for the pandemic unemployment assistance. Will it affect any of what you just talked about in that first question? I don't think it would then.
Not if it's not for the same time frame. From what I understand on that is that you can't get both at the same time frame. But if you're doing the unemployment assistance for the last couple weeks, and then once your PPP is approved, then you wouldn't be able to file for unemployment, I don't think, at the same time. Yeah. So, and a lot of this is based on time frame and proceeds, right? I mean, you can't use the same for an idle or a PPP. You can't count the same proceeds against either loan. It doesn't work that way. You have to count, and that's why keeping the PPP more towards payroll, and then if you do some idle on rent and utilities, sometimes that makes sense too. And it's time period too. So you could say PPP is, June and July or something, but the idle, you're going to be able to apply for the idle until December. So there's some time frame there. PPP is sooner, and probably better to get those moving sooner than later.
And that last question.
I've looked at this. Oh, sorry. I was just going to make a point. I've looked at this for some not-for-profits that aren't 501c3s. And, the idle, although it's debt, I mean, the terms are very, I guess I would say friendly. It could be a 30-year payoff. It's 3.75% for-profit businesses. It's 2.75% for not-for-profits. Including, I believe it could be up to $200,000 without a personal guarantee. I think that you could be eligible for that too. You have to put some assets up for collateral. They do require collateral, unlike the PPP. But just from a straight financing perspective, the idle is I guess would say fairly friendly from a borrower's perspective.
And yes,
right.
Contact your bank about the PPP. The idle loan needs to be directly to the COVID-19 relief.sba.gov is where all those applications are handled.
Okay, thank you.
Yep.
I just wanted to put up another screen in case anybody has any other questions there about places to contact. I don't have any more questions that popped up, and I don't know if anybody has any others. We're on an hour now, so I think we probably should start wrapping up. I want to thank Greg Lindbergh from the SBA for all the information, and we may be doing another one of these in the future if things change a bit more and we have new information. Maybe Greg would come back and we could do it if we and I'm sure there'll be new information. And also thank Jonathan Treader from FreedMaxick. We appreciate them putting the package of information together and Jonathan presenting it and asking the questions. If there's more questions that people have, you know, you can email me and we can get them to Greg. If there's any, you know, questions you might come up with that we're not sure of, we can ask Greg. And I know he's very good about answering questions, so we really appreciate all that he's done. And we've been going back. I probably driven him crazy, but we really appreciate it. And everybody else on the call, I thank Jim Pierce and the work at Economic Development in Wyoming County. The team that we put together, we're talking about, you know, how we're mitigating it at this point and helping businesses and what we can look to into the future, and you know, what comes next and what other webinars that we may want to put together going forward. So let us know if there's any ideas or thoughts that you might have on that. So again, email your questions. Thank you everyone for participating today. We really appreciate it. Stay strong. We'll do everything we can to keep you updated. We apologize if we send you too much, but we'd rather send you too much than too little. And happy Easter, everybody.
All right. Thank you.
Thank you.
Thanks, Scott. Thanks, Greg.
Thank you, Jonathan. Thanks, Scott. Thanks, everybody.
Thank you.
Hey, Scott.
Yeah, I'm still here.
If we wanted to schedule maybe an individual time to talk with somebody, do you have time, I guess, for individual appointments?
Yeah, we could do it like this or whatever.
Yeah, I know there's just some things that I know that we are kind of unique to these programs in a lot of ways, and especially since we haven't decided on whether we're going to even have our summer programming yet. You know, whether that means we have to decide before we apply, et cetera, all of these kind of uncertainties that are still lingering.
Sure. Yeah, why don't you send me an email and we can figure something out.
I appreciate it, man. Thank you.
Sure thing. I don't know, is everybody done with this screen? I'll put all the screens together into one email and send them out to everybody too. See Mr. Hardy. Hello, Jim. How are you? I can't hear you, but I can see you. Let's see if I can unmute you. There, Jim. Can I hear you now?
Yeah, you can hear me.
I can hear you. Good. Oh, so can
Yeah.
everybody else. But good to see you.
Nice job, Scott.
Thanks. Thanks for tuning in. Hope you're doing well.
Still kicking.
That's good. Good deal. All right. Well, we'll see you later. I'm going to close this down.
We'll see SBA's.
Yeah. Did you enjoy it?
Yeah, it was okay.